Mike, got to watch energy this morning, best performing sector. Chevron's leading the Dow, gets upgraded today over at B of A. They go to buy, although they bring their price target to 96, basically arguing that a 7% yield more than discounts any kind of recovery in the downstream. But also some M&A as Devon and WPX agree to this merger, $12 billion enterprise deal. So I wonder whether or not energy is one structurally to watch over the coming days. Yeah,
it's obviously some of the laggard groups getting a little bit of a lift today, and energy certainly one of them. Energy stocks have just badly underperformed the actual commodity, right? It's been part of this whole, we think this is a secular decline industry and we can't really touch it. But yes, if you've done the work on Chevron and you say the dividend is coverable at 7%, we know what's going on with Exxon, 10% nominal dividend yield right now. Market's essentially saying we don't really buy it. But yeah, I mean, there's no doubt about it that the makings are there for this group to make a little bit of a recovery move. But no, I don't think anybody believes it's going to be, a leader rationalizing these, industries with overcapacity like energy. And by the way, steel today, too. Cleveland-Cliffs biasing ArcelorMittal's U.S. business. That's going to, get applause in the market if the numbers work.
Then there's chips as well, Kel. Micron tomorrow night, and Citi adds it to its negative catalyst list because they expect a disappointment. And then we're also watching some of these new U.S. restrictions on SMIC as that sort of low-grade fever as pertains to U.S.-China relations continues, not just in social media, but on chips as well.
Yeah, you hate to be on a negative catalyst list, right? No one wants to be on that. The SMIC thing is interesting because in many ways, as important as TikTok is, obviously because of its user base and its ubiquity amongst, in terms of the social media landscape, I mean, SMIC is a really big deal. The U.S. has taken a really hard line with a lot of these Chinese companies the last couple of years. Even if you go back to ZTE, and there really, I know we talked to Eunice about this a moment ago, but there really has not been much of a response on the Chinese side. The semiconductors, we've heard this time and again. I think Matt Maley was pointing it out last week. I mean, this is the area to watch. Going back to what is this market going to look like if it gets its feet under it? You see outperformance there, negative catalyst notwithstanding. It kind of tells you that the market is getting its mojo back. One final note on energy I just wanted to go back to. There's this Bank of America upgrade at Chevron that kind of captures, Mike, what you were saying a moment ago. They upgrade the stock, but they lower the price target to 96. Yeah. I mean, and they say this thing has a 7% yield. A lot of bad news is priced in. So you have 7% yield at Chevron, Mike. I think you said a 10% yield at Exxon. I mean, either those dividends are going away, or these are like the dividend opportunities of a lifetime, right?
Pretty much. You can go back to early 2016. You had a little bit of a similar game going on there in terms of some of the majors had yields well north of 6-8%. And, pretty much you won the bet on that if you said that they were sustainable. I'm not saying it's the case this time. I mean, I know that, that if you look at Exxon, just in terms of the leverage and what they've spent on, on producing assets over the last couple of years, a lot of concern there. The big question is, does the market already, discount it? And what's also interesting is they've kind of lost the tether to having leverage to an economic rebound to some degree. It seems as if you kind of believe crude is broadly range bound. So nobody thinks that, miles driven is going to go up, but how much to cut into, the unused supply, Carl?